Hey everyone. Look, it's a fascinating time in global macro right now because there's so much confusion as to where we are. I think the world is split. If I look at Twitter, it's fighting all day between everything is going to crash. Can't you see there's a recession coming? Can't you see there's a credit contraction? Can't you see inflation? And then there's others, of which I lie on the other side of the camp, which is tell me something we don't know. What we probably need to start looking at is the other side of this cycle. So I'm going to dig into my views. But as ever, look, the study of markets and the study of economies, you don't ever know who's right until it plays out. But what I want to give you is an understanding of how I'm thinking through this. And then over the course of this week or so, we'll be speaking to some of the most amazing people to get their views, see how they differ from mine. Because what's important for all of us is to hear the other views. And then we can put it all together and decide, okay, what do we think the best course of action?
The Bitcoin UTXO age bands indicator has historically predicted Bitcoin rallies. A recent crossover on September 17 suggests another rally may be imminent. However, a drop below $25,000 could invalidate this bullish outlook. Bitcoin's price often responds to short-term holders' actions. Increased short-term holder profits lead to corrections, while more purchases can trigger uptrends. UTXO bands help track this. Currently, Bitcoin is above $25,000, reinforcing a potential bullish breakout to $30,000. The SEC has delayed the ARK Invest 21 shares spot Bitcoin ETF decision, raising questions about crypto regulation and ETF approvals. A group of lawmakers, both Republican and Democratic, has urged SEC Chair Gary Gensler to approve spot Bitcoin exchange-traded funds ETFs, following a significant court ruling. They argue that regulated spot Bitcoin ETFs would enhance investor protection and transparency. Grayscale Investments recently won a legal victory against the SEC, which has prompted calls for the approval of such ETFs. Bitcoin's price is currently hovering around the $26,000 mark, with an upcoming monthly options expiry on September 29 that could be pivotal for the $26,000 support level. Various factors, including low trading volumes, increased caution among traditional financial institutions, and a strong U.S. dollar, have contributed to the uncertainty surrounding Bitcoin's short-term price movements. Investors are excited about the 2024 Bitcoin halving, predicting a significant price increase. The SEC's decision to delay the ARK Invest 21 shares spot Bitcoin ETF filing has raised doubts about the approval of a spot ETF within 2023. This decision, which came ahead of a scheduled hearing involving SEC Chair Gary Gensler, has implications for other ETF filings by companies like BlackRock and Bitwise. Bitcoin's recovery depends on the SPX maintaining a specific level and the US dollar index cooling off. Let's continue our enlightening discussion with Raoul Pal.
But the spoiler alert for me is I'm really bloody bullish, and I've been bullish all year. And I was starting to get bullish at the back end of last year. And so far, that's played out well. My main bets have been crypto and tech, and they've both had phenomenally good years. In fact, the Nasdaq's had one of its best ever starts to its year. Now, does that mean I'm going to be right going forwards? Who knows? I think I've done the homework. I think I know where we are, but obviously things can change. I also think that there is always volatility involved in markets as well, and the market's job is to try and throw you off. Right now, generally speaking, most people have missed the massive rally in equities, and so they're hoping that the market comes lower. So we've seen that from the institutional surveys. People just haven't been involved. So a lot of it's been retail and passive money, index funds, stuff like that, without people actually making money from it. And that's always interesting to me because we come into year end, and it tends to mean that somebody's going to have to make a decision how they want to report to their investors at the end of the year. And the pension funds and others don't want to show that they were massively underweight equities all year. But let's see how that plays out. I've got some strong views about the rest of this year as well. So without further ado, let's go through some of this. So firstly, let's think about growth, the growth element. Where the hell are we? Now, many of you have seen this chart of the GMI business cycles dominoes. And this is really important to understand because, as Stan Druckenmiller says, you never trade today's news. You need to understand which part of the cycle is driving the asset prices and which part of the cycle is driving the Federal Reserve. So on this, myself and Julian Bittle, who works with me, Global Macro Investor, well, our job is to live as far out as possible. So we're in that 8 to 10 months area ahead where we're looking what's happening to the cycle. We actually go further out, but the bulk of our business cycle work, as opposed to our secular work, is this 8 to 10 months out. Now, the markets have been roughly trading 2 to 4 months ahead of the business cycle. In some cases, stuff like technology and crypto, they've actually been even further ahead than normal. And then we've got the central bank. Well, they're lagging with the ISM. If we take the ISM as where the economy is today, because it's basically a real-time GDP indicator, well, the central banks, well, they're looking for CPI to come down and unemployment, and those things are really lagged. In some cases, 6 to 8 months. And when we get down to the big inflation stuff like shelter inflation and wages, I mean, they can be over a year, sometimes 2 years lagged as that keeps changing. The ISM gives you the snapshot of where we are, and it's been around this kind of 46, 47 level for a while now. Now, that's a really important level because historically, that has pretty much had a 100% chance of recession. And I think most of us realize we've had a recession. I think most businesses have seen a slowdown. I think many people have laid off jobs, and we're seeing, and I'll come on to jobs later, a change in the job structure. But that recession has not been called yet. We've seen the economic data, the GDP data, still somewhat buoyant. But I think it's there, and I think when all is said and done, the recession will have been called during this year. But here's the rub. I think it's actually about to start becoming over. Now, again, I'm using the ISM. The ISM leads GDP because that's lagged by 3 months. So therefore, by the time the ISM gets positive, which I think is coming, and I'll show you that in a sec, that's all going to play out kind of Q1, Q4 to Q1. But the point being is we are at the trough of the actual cycle right now. So if we look at what we use as our main indicator, the GMI Financial Conditions Index, it has a 9-month lead. Now, this Financial Conditions Index is a blend of the dollar, commodity prices, and rates. Now, it led the whole cycle, suggested the ISM is going to recover by a significant portion of time. It also gave us the trough 9 months prior. So we've known roughly when the ISM was going to trough from using our indicator a long time ago, and what that was going to do to financial markets. You can see, interestingly now, it's rolling over somewhat. That's based on the fact that the dollar's gone up recently and rates went up recently. So it tells us something that we may see growth slow down or have a soft patch later in 2025. And anyway, let's not get ahead of ourselves. We're focusing on now, boom, bust. It's that crash, or are we in a next bull market idea that I want to go through.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.